Hey, what's up, guys? This is Marseille, aka the Property Pastor. I'm coming at you one more time with a valuable video that I want to share with you today. And I want to ask the basic question, or challenge you with the basic question: is your money working for you, or are you working for your money? And today we're going to talk a little bit about the law of 72, which applies to compound interest. And it was formulated many years ago by Albert Einstein, pretty sharp guy. And we're going to just kind of break it down. I want to explain it to you and really help you to answer the question that we posed just a few seconds ago about whether or not our money is working for us or if we're just working for our money. Before we jump in, I want to remind you, I encourage you to like and subscribe to our page down in the right hand corner. That way you're going to get valuable information, notifications when we publish new content that's going to help you in your real estate endeavors, in your financial journey, in your journey to create wealth for yourself and for your family, and to be a good steward over everything that God's blessed you with. So let's break it down. So what is the law of 72? So like I said, Einstein came up with it many years ago. And basically what it says is that if you take the number 72 and you divide it by the interest rate that you're getting on any particular investment, it will tell you the number of years that it will take for that investment to double. So for example, if you start out with $10,000 and you divide it by the interest rate, how many years will it take that $10,000 to grow to be $20,000? And that doesn't include you making any additional principal investments each month, each year, whatever the case is. It just basically says, hey, if you start with this number and you let it you let it grow through the power of compounding interest, that's how long it'll take to double. So basically, the way the law 72 works is, like I said, you take the number 72, you divide it by the interest rate, not the true number with decimal points moved over and whatnot, but just the number. So for example, if I've got 1%, I'm going to take that number 72 and I'm going to divide it by 1. You guessed it, it's going to take 72 years for my initial investment to double. Right. So if you look at what we're typically getting on your savings account, if you pull up your statement right now, it is much less than 1%. A lot of them are about 1/4%. So you take a quarter and you take 72, you divide it by that number, 0.25 or whatever that is. It's going to take quite a while for it to double. But just for easy math, right, we're going to just stick with 1%. So if we just had a phenomenal bank that was giving us 1% interest rate, that would in turn take us 72 years. Now, if I'm gaining 2% of my money, I'm doing a little bit better. Maybe I've got a money market account, a CD, or whatever the case might be. That's now going to take me, if I start out with $10,000, whatever, and I want to grow to 20, it's going to take 36 years. So again, still quite a while. But then let's say, for example, we've got some decent performing bonds or whatever the case might be, and they're generating 5% interest for us. Now it's going to take us only a little over 14 years for our initial investment to double. So we're starting to make a little bit of progress, and you can see how that gets better. But let's say, for example, we are investing in something that's giving us a 10% rate of return. Now, at a 10% rate of return, the number 72 divided by 10 gives us 7.2 years for that initial investment to double in value. That's not bad. That's actually pretty good. So if you think about it, now you might be saying, well, Pastor, property pastor, I've been saving my money. I was taught to save money in a savings account. I've been diligently doing that every single month. I pay myself first. I put that up towards my savings, this, that, and the third. You have to remember that the cost of inflation is on average about 3% a year. So what does that mean? That means that the cost of everything you buy goes up about 3% per year. It's going to be milk, gas, all the daily things, clothes, essentials, food, all that kind of stuff. It's going to cost you on average every year 3%. So if your investments of any sort are not making at least 3%, you're actually losing money. In terms of inflation and things like that. Typically, your bank, if you look at your mortgage statement, if you own a home, you're probably paying somewhere between 4 to 5% interest on that loan. And we consider those to be pretty good, pretty low interest rates, but you can see that the bank is actually outpacing inflation. So the bank will give you 1/4%, but it will in turn charge you 5% for the same money you're putting into it. It turns around and loans it back to you and other people for 5%. It must be pretty smart guys. But then let's take a look at a credit card company. So the credit card company, depending on where your credit rating is, or depending on how frequently you pay your bill off and things of that nature, you could be paying 5%, you could be paying 10%, you could be paying upwards of 20% interest on your credit card, and some of those things are compounded daily, right? So that's why the credit card, that's why you get so many advertisements for credit cards, because they really want to they want you to not pay. They want to take advantage of compound interest, and really, make a lot of money off of you and I. So what does that all mean, right? So we talked about the Law 72, and now your head may be spinning. You may be saying, Marseille, I am upside down. I'm going the wrong direction. But I don't want to make change. I want to do something different. So, what should I start doing? I think really from the standpoint of, investments can be a little bit intimidating, but they don't have to be. One thing I found is what they call dollar cost averaging and the power of index funds. So I believe in having multiple streams of income. So I invest in real estate. I've got 401k. I've got mutual funds and things like that. Looking at all of the sources. I'm trying to generate as many. You want to generate as many income streams as you can, and then obviously earned income and things of that nature, right? But if you begin to invest in index funds and things of that nature, an index fund basically just takes the overall stock market and then just invest in it, right? So if all you did was invest in the stock market, on average, the stock market has returned anywhere from 8 to about 10, 11% over time. And that's a pretty good return. A lot of people get messed up because they kind of follow the highs and the lows and try to buy highs, sell low, this, that, and the third. But what wise investors do is they realize they cannot outpick the market. They can't beat the market. And I don't try to beat the market. I don't recommend you do either. It's too much thinking. It's too much thought into it. So I think just getting some basic strong. I think Vanguard's got some really good ones, some index funds, where you just invest in the market over time. Just pick a number, go at it every single month, and just put it in there and don't think about it. And I think that's a great investment vehicle for people trying to gain a solid return on their money. When things start to dip down, don't worry. That's actually when things go on sale, right? So I think from that standpoint, the stock market is a pretty good place to put your money. Additionally, I love real estate. I go by the name of the property pastor. Real estate investing is lucrative. It's been very good to me. It's been very good to a lot of people. So I invest in it, and constantly, and will continue to do so. So I think utilizing. If you may say, well, Marseille, I don't know anything about investing. You can become a bank yourself. A lot of investors, like myself, we partner with private money lenders, who will then in turn say, hey, um, I've got funds in a 401k from a previous employer through a Roth IRA or what have you, and I want to turn it into a self-directed IRA, and I want to deposit those funds with a person who knows what they're doing, and they want to give me a good solid return, 7%, 8%, 10%, whatever that. And that's the beauty of using the self-directed IRA, is that everything's negotiable. But that's a great investment vehicle. There are also real estate investment trusts, which are held, in much larger investments where things are spread abroad and managed by asset managers, things like that. So those real estate is really a very good place to put your money as well. And that's really what I mean by putting your money to work for you and not just going to work for your money. You're trading the best years of your life for a paycheck, but that paycheck is just being spent on clothes and shoes and a vacation, and going out every weekend. You're working for that money, but that money's not working for you. So I really wanted to just kind of give you some trying to introduce this topic to you. I pray it's been a blessing to you. But as I close out, I really want to encourage you to invest as early as you can, invest as often as you can, and invest as much as you can. That $50 you get, you can take it and blow it. $100 you can blow it on a pair of shoes. Those shoes are going to wear out, and they're going to just be sitting in the back of a closet. You can take that same $100, you can put it into an investment vehicle where it can in turn grow, and ultimately you can actually live off of those dividends. So as time goes, you get to the place of financial freedom. What a lot of rich people do, people who have wealth in this country do, is they invest great levels of principal, and they just literally live off the interest of that principal. So once you get to that place where your dividend, your interest payments, or your what you're getting from an investment from an interest perspective, it can actually be enough to sustain your lifestyle where you don't have to go to work anymore. That, my friends, is financial freedom. I think that's what we all want. So, I hope this has been a blessing to you, and I wanted to just give you a little bit of intro to the Law 72. I pray it's been a blessing, and I want you to put it to work. Information, alone doesn't really give you much but a big head. But it's when you actually put it into practice is where you truly experience results. That's what I got for you today. Hey, God bless you guys. Don't forget to like and subscribe so that you can get notified and get tuned into great content that's going to help you to grow your life to be the best version of yourself you can be. God bless.